Let's talk about the elephant in the room, and that would be the insane Bollinger Band squeeze on the long-term monthly chart that is about to trigger a massive rally that will make Friday's 14% gain look like a walk in the park. That monthly Bollinger Band squeeze on NIO is the elephant in the room. On a 20-period basis, the bands have compressed to multi-year tightness, with price now pressing right up beneath the upper band around 642 and the mid-band, the 20-month average, rising toward 471. When you see this kind of volatility drought on a monthly time frame, it's usually the market storing energy for a directional move that lasts more than a few weeks. Often a 1 to 3 bar expansion, measured in months, not days. In other words, the next decisive break from this coil can define the trend into Q4. For triggers, keep it simple. A monthly close above the upper band, 642, is the classic squeeze release, and sets the stage for a band expansion or even a band walk higher. If that happens, I'd expect a first migration toward the prior value area, 75 to 83, then 95 to 10 if momentum holds, and weekly pullbacks keep finding bids above the broken band. Conversely, a rejection here, think a long upper wick and weekly closes back under 580, often leads to a volatility expansion down first, with mean reversion toward the mid-band near 470, and, in a deeper shakeout, the lower band around 3. Because this is a monthly squeeze, give it monthly confirmations and manage risk around those band levels. Bullish bias only on sustained closes above the upper band. Defensive or short biased back inside the bands with a loss of 580 to 550.
If you owned NIO into August, you're smiling. If you're late, you're asking, is this the start of a multi-month move or a rally to sell? Today, I'll show you the exact levels I'm trading, how I'm sizing options, and a smarter way to play China EVs if you don't want single stock risk. Like and subscribe if you want real tradable plans, not hype. So, here's what just changed. But before we continue, I need to disclose that we are up 120% already on our NIO call options that we shared with members this week. So, this video is just what we are doing in our own account and not financial advice. NIO ripped off April lows and reclaimed a multi-year downtrend on the weekly chart. Volume expanded on the breakout, options activity spiked, and the tape started pricing better deliveries, new models, and a friendlier China macro tape. FXI, the China large cap ETF, also reclaimed its 200-month moving average, telling us the broader China bid is real. Historically, September isn't kind to NIO, with lower win rates than summer months. That doesn't kill the trade, but it says respect risk. Watch 3 dates. Monthly deliveries, the early September earnings window, and the Fed's Jackson Hole tone feeding into global risk appetite. So, I'm gonna make it real easy for you. We are bullish above 690 to 710. That's the top of the recent breakout shelf. Hold above on a daily close and the path opens to 770 to 810. Major fib/old supply to 9. Bearish below 620. Lose the shelf and the market likely hunts liquidity near 570 to 590. If panic hits, 520 is the high-volume node to expect buyers. Invalidation for bulls. 2 daily closes back inside 620 to 650 after a breakout. That's a failed move.
Let's talk about the elephant in the room, and that would be the insane Bollinger Band squeeze that is about to trigger a massive rally that will make Friday's 14% gain look like a walk in the park. If you want torque, small size, NIO, October 18th, 7 or 8 calls. IV is elevated but not extreme. You're paying for momentum and catalysts. I risk 30 to 40% of premium on a hard stop, then trail winners with a 50% take profit and a runner into 8, 10 or 9. If you want probability, use a vertical. Example, October 7th or 9, call spread for 0.40 to 0.50, max value is 2, great if price tags 9 by October. If you want staying power, Jan 2026 leaps 750 to 10 with covered call overwrites on weekly rips that funds time and cushions drawdowns. I'm also long a starter in October 8th calls with a stop if it marks minus 40%, or NIO loses 620 on a close. I'll add on strength via a 7 or 9 October vertical if we hold above 710 with volume. For the basket, I'm long FXI SEP to 19th 40 calls. I add on a clean reclaim of 40 after dips to 39. If FXI closes under 384, I'm out. Near term, NIO has momentum and a clear map. 710 hold to 810 to 9 is on the table, but single name risk is real. Pair it with FXI if you want cleaner odds. If this helped, hit like, drop your levels below, and subscribe next video. I'll backtest NIO seasonality against options IV to find the best weeks to buy premium. This is education, not advice. I don't know your risk limits. Trade small, plan exits, and respect stops, and hire a financial advisor or get in a good stock and options trading group.